Saturday, October 22nd, 2016, Monaco 64, home of alternative economics and contrarian views. So I like to give an update on what the markets did last week, the week of October 17th to October 21st. And then I like to talk about they're all sinking. And what does that mean? Well, that means that all fiat currencies are sinking against real money. And it is gold, real money. Even JP Morgan said back in 1912 when he was asked by U.S. Congress, he said gold is money, nothing else. And there's many of you out there who are going to argue with me and say you can't take gold to Kmart or anywhere else and get paid for it. But I'm sorry, just look at all the major central banks of the world and how much gold that they hold. If it wasn't money, central banks wouldn't have gold nowadays. But apart from that, let's start with the update of what we saw in the markets. My summary basically is that it was very quiet in terms of the stock market. The Dow was virtually unchanged. It went up only like 7 points. The S&P did have a good day yesterday, intraday. We were actually down on the week at the start of the day, but we finished up 8 points on the week. So up 0.38% S&P. The 10-year yield dropped 6.3 basis points last week. So that means treasuries have stabilized a little. The 10-year treasury note went up in price. So fairly quiet stock market. The Dow, if you look at the chart here, is still trading in the range between 18,000 and 18,400, and it's been doing it since September 12th, basically the beginning of September. So about 6 weeks in the trading range. Onto precious metals. Gold had a good week. The PM fix was 1266 yesterday, 1266.05 to be exact. Previous Friday was 1251.75, so up 1.14% on the week. Silver didn't have as good a week. The fix was 1751 versus 1747 the previous week, so up only 4 cents or 0.22%. The mining shares or mining stocks did very well last week, so that's a good sign. Let's have a look here. The XAU index, which is the Philadelphia Gold and Silver Sector Index, it's got 30 mining stocks in gold and silver mining stocks. So XAU finished 86.87, up 5.84 points and 6.72% on the week. So a good week for the gold and silver mining index, XAU. HUY index, which is also composed of 30 mining stocks, but just gold. It's the gold bugs index. That finished the week up 16.45 points at 215.96. And it finished, of course, above 200. That was up 8.24% on the week. So very good week for the miners, gold and silver miners. And what else? The dollar index, which a lot of people, look at, of course, as a signal, about the dollar's strength or weakness. That finished the week about 0.2% higher at 98.695. But one thing I like to say about the dollar index, the major component of the dollar index is the euro, which is 57.6%. The yen has 13.6%. The pound 11.9%. So, and the other currencies are the Canadian dollar, Swedish krona, and Swiss franc. So yeah, I mean, it doesn't include the Chinese yuan and other emerging market currencies. I'd like to point out the dollar index. So now I'll go into the main topic of this video in terms of the bigger picture, and they are all sinking. And I did write a few articles years ago, and I'll put the link below to those articles. They're on marketoracle.co.uk, and I was pointing out that the price of gold in all different currencies is going up, and that all currencies are sinking against real money, and that they take turns. So I like to look here first at the price of gold in British pounds. And this week, the price of gold in British pounds was up 1.3%. It closed at that, while the PM fix was 1,038.667. So here's the chart. The British pound, the high, as you can see in September 2011, was 1194.3. And then the low in July last year was 693.93. So we bottomed basically 6 months before the US dollar price of gold bottom. And yeah, if you look at the chart, it looks pretty bullish right now. And the 50% retracement of this correction we've had since September 2011, that was that is 943.8, so basically 949 pounds, and we broke right through there, just after Brexit, as you can see there on the chart. So that's the pound. Now I'll look at the euro price of gold and the chart as well. So the XAU EUR, or the euro price of gold, the PM fix was 1164 this week on Friday, so it was up 2.5% on the week. So for the people who are domiciled in the Eurozone, it was a good week for them in terms of the gold price. And I brought up the chart here, and interestingly, in euros, the high was not in September 2011. The all-time high for the euro price of gold is October 2012 at 1386.01. The low was actually December 2013 at 857.74. So the euro price of gold bottomed basically 2 years before the dollar price of gold, which is quite interesting. And the 50% retracement of that move from October 2012 to December 2013 is 1121.87. So right now we're at 1165 roughly. So we are above the 50% retracement. Excuse me. So now let's move to the dollar price of gold, which is the price that most people look at, even in other countries where they don't use the dollar. So as you can see, the all-time high was in September 2011 at 1920.18, and the low was December last year at 1046.5 roughly. So the 50% retracement is 1483. Basically, yeah, 1483. So we're not near there. We got up to around 1375 earlier this year, but still not gone through that 50% retracement. And why am I talking about these different prices of gold in different currencies? Well, because I think as the dollar is the boss, it's the reserve currency. You need to go back to Bretton Woods. Who was in charge of that, conference? It was the U.S. The British were involved, but the people who were really in charge were the Americans, and they've been in charge since then. So the dollar is at the core of the fiat monetary system, and in my opinion, the fiat monetary system is sinking against real money. That's the only way to rebalance the system. So I think, excuse me, all the currencies are sinking, but they are just taking turns, and it's only a matter of time until the U.S. dollar, start sinking even more against gold as well. So to finish off, let's just have a look at the dollar index, which is mostly, composed of the euro, a bit of pounds and yen, and some other minor currencies like the Canadian dollar and the Swedish krona and Swiss franc. So the chart is from 1992. So the 90s was basically a pretty good time for the dollar in the early 2000s. So the dollar index topped in July of 2001 at 121.02. And it was a one-way street down until 2008, where we saw a bottom around 70.69 in March of '08. That also corresponds to the high in gold we saw. It was the first time gold broke through 1,000. It was 1,031, the high in March 2008. So since then, the price of the dollar index has been bullish. It made a bottom in '08, and despite that, gold is actually up since 2008, because the high was 1,031. We're now at 1,265. So yes, gold does do. A lot of people talk about how the gold price is inversely related to the price of the level of the dollar against other currencies. That's partly true, but I think you could also have the dollar doing well and gold doing well, as we've had for the last 8 years. So the dollar index, basically, we had like a double top last year, just above 100. So that's a key level to look at. Of course, we have November 8th, which is the big day for the United States. It's almost like it's like a referendum, basically, on the establishment. So we'll have to see what happens. So just thought I'd talk about, all the different currencies and how they're moving against gold, and the fact that all in all, they're moving lower as time goes by. So if you enjoy this video, please give me a thumbs up. Also, if you like to, share it with friends and colleagues. And if you haven't subscribed to my channel yet, please do. And if you'd like to donate as well, there's some links below in the description. Take care. Have a good weekend. Bye.